need of introduction for Sadaf. A very well-respected industry leader in the microfinance segment, with over 2 decades of experience in the leadership roles. He had been with institutions like HDFC, Satin, Spandana Spurti before getting into Muthoot Microfin. In Muthoot Microfin, he has joined in 2010, and since 2015, he has been operating as the Chief Executive Officer. Under his leadership, the Muthoot Microfinance has over 3.4 million active customers across around 1,700 plus branches in 22 states, with close to around 12,000 crores of AUM. The great thing about Sadaf has been he's technologically driven. He has been instrumental in doing most of the automation, paperless lending. So these are one of the key strengths of Sadaf in terms of building the Muthoot Microfinance. He has been a recipient of Golden Peacock Business Excellence Award, and under his leadership, Muthoot Microfinance has been ranked as the top 30 BFSA workplaces in India, and also recognized as a great place to work for 4 consecutive years. So thank you, Sadaf. Thank you for joining.
Thank you very much.
So how are you feeling in GFF?
Oh, great. Thank you for having me here.
To start with, some basic questions on the industry. You've been in the industry for almost close to 2 decades, and in the recent past, you have seen some kind of uncertainties in the industry. How would you assess the current state of the microfinance sector? Do you think the revival, signs of revival, are coming very soon? And what are your anticipations?
So, if you look at microfinance today, as of September 2025, I think the green shoots are already there. We are pretty much at the end of the crisis and its impact. Bearing in mind that we had pretty good 2 years post the COVID. So FY 2022-23 was great. FY 24 was also great, but FY 25 was a challenging year. Because of various factors, macroeconomic indicators like a little bit of a election impact, some weather-related events, and some political intervention, and which led to over-leveraging of client. But now that regulator as well as the SROs have taken sufficient action in terms of ensuring that over-leveraged customers are avoided, and of course the credit bureaus play an important role there. We have the data available with the customers who were over-leveraged, more than 4 lenders they were borrowing from. They were at around 20% at the beginning of FY 25. If you look at today, they are as low as around 8% in June, and maybe if you look at September data, it will be even lower. So a lot of corrective action have taken, and industry has made the provisions, and whatever necessary write-offs are there which have taken place, and now the disbursements are picking up. So definitely the industry is at the fag end of the crisis, and whatever the peak of the delinquency that is achieved in September, I think going forward in Q2, Q3, it will be much better. And the macroeconomic environment is also improving. If you look at the GDP which came in the last quarter, it was 7.8%, which is a very, very good number. And usually the thumb rule of credit growth is like whatever is the GDP, 2 times is the credit growth. So we can expect around 15% credit growth in the industry, and that happens, a flow of cash flow will come to the customer. And also like with say various government initiatives like such as cutting the GST, making things affordable, which will also help leave a lot of cash in the hands of customer, and that will help customer to utilize that cash judiciously, use it for repayments or other expenditure that they would have deprioritized earlier. So I think overall it looks quite positive. The monsoons have been good. The rains have been more than sufficient, which will lead to a better crop yields, and that will also result in a lot of cash flow improving at the rural and bottom of the pyramid, and we are seeing that in rural areas the demand is also increasing. So definitely, I think from a cash flow perspective, from a disbursement perspective, from the incremental delinquency perspective, I think things are improving, and we are seeing good collections also from the previous dues. So to a great extent, I think the bad days in terms of microfinance portfolio impact is concerned are behind us.
Thank you, Sadaf. I think that is what we are all hoping, a revival in the microfinance industry, which is definitely very, very important for strengthening the Indian rural economy. Thank you for that. Also, the recent report in some of the newspapers also suggested that the MFI lenders are slightly increasing the lending rates. Do you believe this is justified, or will do you think this might have an implication on the borrower stress overall, because the industry is still going through the stress, and that is also in spite of the RBI doing the repo rate reduction.
I think two, 3 points you made there. I'll go one by one. First fact that increase of 100 basis point interest rate in microfinance lending lead to an increase of an EMI by around 10 or 5 rupees per month. So that 10 rupees or 5 rupees per month increase would not impact on the affordability of the loan. That's point number one. The point number two, which you mentioned that the rates have been increased, I think RBI has given a very robust formula to calculate the lending rate. It has factors as a cost of fund, your operating cost, your margin, profit margin, and your credit cost. So there are four elements of this which are there, and it has to be board approved policy. So if there is a change in any of these elements, like credit cost has been high in the past, so on an average the industry was facing a credit cost of around 7% last year, 7.5%. So I think it was natural that part of it gets passed off because it's a risk-based pricing model. So definitely the prices were scheduled to go up, which has gone up. On the second point which you made, that in terms of despite the declining interest rate cycle, though we have seen around 100 basis pip being cut by central bank, that rate cut usually gets passed on in a kind of a with a 6 month lag, but this time around it has taken a little bit more time, and it is more so because in the last financial year, the disbursements were slightly slow, so the borrowings were naturally slow. And when there were no fresh borrowing, the new rate was not applicable. So the rate cut, in a sense, from the banks have not flown to the MFIs. Even in the recent policy report, the governor has said around 58 bips, the rate cut has flown out of the 100 bips. But in MFI, if you assess, I think that rate cut, that 58 bips has also not flown. So I think the policy rate cut benefit will start coming on from Q2 and Q3 when banks start lending more to MFIs. And most importantly, I think once the rate cut comes in and the credit cost also rationalized, definitely MFI will look at pricing these loans better. But at the moment, definitely from an affordability side, there is no challenge, and the pricing are fair because it's based on the RBI approved risk-based pricing policy, which I explained to you. And definitely the benefit of rate of interest is dependent upon what is your sourcing mix. If the floating rate borrowing is more, then definitely the benefit of those rates will come immediately, and then you can pass on the benefit. But if most of the borrowings for the MFI is on a fixed rate, then that benefit will come only in the incremental borrowing. And once those incremental borrowings are there, and if it makes the impact on the overall cost of fund, by the pricing formula, automatically that benefit would be passed.
Thank you, Sadaf. So, you're saying the increase in the rate of interest is temporary in sign. So, my next question is: given the evolving credit landscape, do you believe there is a need for more robust risk assessment framework for MFIs? considering that most of the MFI lenders don't use the consumer credit score as much in terms of their rule engine or for the gating criteria. Also, in your view, could you suggest how the newly launched CRIF's MFI lending index will help identifying and also onboarding the better quality borrowers to your portfolio?
I think it is very, very important to recognize that today, when we are lending loans at the bottom of the pyramid, there is significant amount of progress have been made in the last decade. Definitely with Jandan, Aadhaar and mobile being available, and there are multiple lending entities who are catering to the bottom of the pyramid. So to a great extent, the access problem has been solved. So it's not as if the borrower does not have any avenue to borrow. There are avenues to borrow. So at the same time, it is also is responsibility of the lender to ensure that the customer is borrowing judiciously, and there has to be a responsible lending practice that needs to be followed. And in that scenario, it's very, very important to assess the customer individually. Earlier in the JLG model, uh, all of the customer, it was a homogeneous set of customers, and you give a homogeneous amount or almost a similar amount to all the customer equally. But now there is definitely a need and case for assessing each and every customer individually and evaluating the credit worthiness of the customer and ensuring that the right amount is given to the right customer. And in that context, I think the CRIF score plays an important role. You are able to identify the customer A from B, that what is the credit score for customer A and what is the credit score for customer B. Maybe they are in the same group, but each of the member, depending upon the credit score of these members, you can give the amount. And that is the way it should be. And I think incrementally, more and more business in microfinance will move in that direction, where it will be a individual specific loans, even though it will be in a group format, but it will be a loan underwritten for a one household based on their income and their capacity to repay, considering all the obligation. It will not be one size fit all kind of a strategy, which will definitely augur well for microfinance in the long run.
Thank you, Sadaf, for recognizing that. So my next question is in terms of the perspective of increase of the percentage of non-qualifying assets by the RBI. Do you anticipate a strategic shift towards more secured lending by the MFI lenders? And how is your institution also responding to this? And also, do you foresee some kind of heavy competition in the secured market?
I think the first of all, I think the initiative of reducing the qualifying asset from 75 to 60% is a great initiative that RBI has done. This has been a long-standing demand for microfinance institution, and both the SROs, Sadan and MFIN, have made quite a bit of recommendations for that. So I think first thing is first to recognize that it is a good move. Of course, this creates more kind of a room for diversifying your asset class. Most of the loans in microfinance book are unsecured loans. So with a more kind of a non-qualifying asset, 40% room available, you can build different asset class, and this is much needed. The customer that we have been catering to is an aspiring customer, and you have given them credit for 5 6 years, and they've come up the curve. So their needs of the household have also increased. So a customer would want a two-wheeler loan for herself, for her family, or would need to repair her house or build a new house, or a housing loan, or to expand the business, a loan against gold or loan against her property. So I think these are all the avenues that a microfinance institution can focus on. We have also looked at these opportunities. We have started these three product lines. One is Micro Lab. We are giving loan against property to our customers. We have seen in our database around 1,14,000 such customers are already there who have taken loans in the mortgage category. without over leveraging those customers, we are looking at how we can provide more efficient and more useful loans to these customers. Similarly, we are also looking at gold loans. Around 6 lakh customers, 3 lakh 27,000 customers have taken gold loans. So we are looking at providing gold loans to those customers as well. And at the same time, we are graduating certain customers who have been with us in a group format to individual loan format. So I think that is the diversification strategy that we have. And definitely in the short to medium term, we will be around 85% JLG and 15% these kind of assets, non-JLG. And in the long run, we will be around 70% JLG and 30% non-JLG portfolio. That will also help us diversify our balance sheet and diversify our risk profile and ensure that any sort of a cyclical event is better managed in future.
Thank you, Sadaf, for that. My next question is, there appears to be some kind of slowdown for the new to credit customers, which has been very widely published in our reports, and you also agreed. Do you expect this trend to reverse, or there would be some kind of new to credit customers being onboarded, or significant number of those kind of borrowers being added in the microfinance book this year? And what measures might help improve the financial inclusion in this segment? And is it the only reason why higher ticket loans are getting slightly increased in this segment?
I think the two questions of yours are interlinked. One is on the new customers, new to credit customers. So one function is that, of course, the overall disbursements in the industry have come down significantly in the last couple of quarters over the last year. And I think the focus has been on retaining your existing good customers. And because of the guardrails that have also been implemented, there is a like kind of a focus on ensuring that whatever good customers that you have, you should retain. So the focus is more on retaining customer and less on new customers. And I think the expansion also has not happened so much. For microfinance entities, the focus has been on cost reduction and ensuring that wherever you have operation, you will maximize that output from that operation. So new to credit has been less in focus. It's not that it's completely zero, but it is there, but it has gone down. So if there were around 60-40, kind of a 40% new to credit, 60% existing customers, that shift have come to around 25-75, 25% new to credit and 75% existing customer. And because the focus has been on the existing customer who's a good repaying customer, so the credit has been enhanced. That's why the average ticket size has gone up. So that is the primary reason why your average ticket size is going up. I think one more question you had within this.
I mean, in terms of the average ticket size, is it the only reason?
Yeah, so average ticket size is only up because the focus is on the existing customers. That is why I think there is a focus. But apart from that, I think as we have also expanded to newer territories like Assam, we have entered last year in AP and Telangana, and we are expanding our penetration in AP and Telangana. So definitely in those territories we will acquire new customer, and so as I think many of the other industry players. So overall, the new customer acquisition will also improve going forward.
Thank you, Sadaf. And my last question: in the last 12 months, we saw some of the very good performing states going, the delinquency numbers going up drastically in these states. Do you think that the trend is getting reversed, and you are able to make significant improvements in those couple of states?
Yeah, I think the delinquency trend, if you analyze closely in the last financial year, it's directly linked to the economic kind of activity in those states. So, as I explained, that there's a macroeconomic event. So, when such kind of a slowdown happens, the impact comes in states where per capita income is lower. So in those states, the impact is there. States like where per capita income is good and affordability is good, like for example Kerala, Tamil Nadu. In those states, the challenge is not there. But there are a couple of northern states because of which I think there was a challenge. But now that economy is reviving, the GDP growth is improving, there is good macroeconomic indicators like good rain, good harvest, and also GST cut. All of this is boosting kind of cash flow at the household level. Definitely, those states will come back, and I think we have seen in the past the best thing about microfinance industry is that the slowdown is fast, but it's also the revival is quite rapid. So I think we should see that in coming quarters. Usually, quarter three, quarter four is a business end of the financial year for microfinance industry. We would see disbursements increase in this quarter. And as the cash flow increases at the bottom of the pyramid, definitely you will see better repayments. As far as our experience is concerned, we are already witnessing better collections from overdue account. We used to see around 6 crores of collection per month from overdue accounts. Now we are seeing around 20 crores of collection from overdue accounts. So that has gone almost 3 times. So that I think impact you will see overall. And definitely that will help industry to come back and revive really fast and continue to grow it that it has shown in the past.
With that, thank you so much, Sadaf, for joining us. It was pleasure having you, and we'll again see you next time.